Hi guys, it's Alpha Blue and you're welcome back to my channel. If you're new to this channel, you're welcome. So in this video, I'm going to be doing a very quick review of the Euro USD analysis I did earlier today during the London session. So this is the Euro dollar 4-hour time frame. And earlier today, I was saying that I was expecting uh the bulls to take over this market because I was also expecting that the dollar would dump, the DXY was going to dump because of the CPI data that was released yesterday. So CPI data came out lower than expected yesterday. And as a result of that, the dollar dumped. So I made a video on how you can use Forex Factory to uh, trade the news, to understand the news and trade the news. You can simply just come to Forex Factory whenever there's like a red event, then read any of these folders. Read these folders, then you understand how the news is going to affect the currency pair you're trading. So this is PPI. There was PPI today and unemployment claims and all of that. We'll come to that later. But yesterday was CPI, and from the CPI data that was released, you will anticipate like the Euro USD, sorry, to buy, to be on the run, because the CPI data was low. It was lower than expected. So dollar was going to dump. And if dollar is dumping, Euro USD is going to buy, because Euro USD is always inversely correlated to the dollar. So as we got into today, I was expecting that the Euro USD was going to buy because of dollar weakness, which was due to CPI data. And there was also news today, and the news was also very bad for the dollar. As you can see right here, core PPI monthly, we had 0.1, of which the forecast was 0.2%, and we have minus 0.1%. The previous was 0.2%. So if you read this is how you can simply just understand the news. Let me just give you like a brief explanation of the fundamentals, how to understand the fundamentals. Very, very simple and easy. You don't need to even do any much stuff. So here is good. It says change in the price of finished goods and services sold by producers, excluding food and energy. Now, here is the effect and how this will affect the market. Here it says actual greater than forecast is good for currency. So what this means is that if this news right here that came out here, 0.1%, if this actually is greater than the forecast, dollar is going to buy. Dollar is going to pump. But if actually is less than forecast, it means that dollar is going to dump. You understand? As simple as that, guys. As simple as that. So today now, the news came out at minus 0.1, which is lower than the forecast. So dollar dumped. Then unemployment claims. Let's read it and see. You come to the effect. Actual less than forecast is good for currency. Actual less than forecast. Here now, forecast was 233K. Actual was 239K, which is more than forecast. So, of course, it was bad for the dollar. So, dollar dumped. Now, if you go to the charts, let's go to DXY. If you go to DXY, now look, starting from yesterday's CPI all through till today's PPI and unemployment claims, you see that the data was not good for the dollar. So dollar dumped, it kept dumping. So that's just a very simple way to use fundamental analysis to understand how the market will move and why the market is moving the way it's moving. So with that knowledge now, yesterday was CPI, and CPI data was bad for the dollar. So I already knew that Euro USD was going to buy. So all I was doing as of this morning during London session was looking for the key demand zones that was going to be respected if this pair is going to continue its bullish move. And I was able to mark out this demand area right here. But now I was waiting to enter on a confirmation. When I found here to be my demand, I didn't plan to just go in aggressively on the demand zone. I wanted to see price react to this zone before I go into the trade. And that's one of the disadvantages of waiting for a confirmation, because sometimes you get to miss a trade like very, very sweet trade. You get to miss it because price doesn't really come back to retest. So when I marked out, I saw that price gave this very huge push to the upside. I knew that okay, the bulls were already in the market, buyers were in control. So next thing was I went down to the lower time frame, like 5 minutes or so, marked out. I think it was on the 3 minute, marked out a bullish engulfing candle here, which is like another block for me, and then set my buy limit, waiting for price to come and take it, to tap it, and then goes up. But then price never came back. It just stalled, and boom, it went straight up. So that's one of the things you face as a trader. It was really frustrating though. It was really painful. And this is what makes the difference, guys. This is a very important lesson I want to point out. And it's not as if I'm already perfect in doing this, because I myself sometimes I freak out and I get, this FOMO, and I jump into the trade. Now, today I was like, okay, should I jump into this trade? Like the fundamental side of it was there, and I was really expecting that this was the move that was going to happen today. But then from my usually entry model and my trading setup technique and all of that, this didn't really meet up with what I usually trade. Now I was contemplating, should I jump into this trade or should I just chill out? Omo, I didn't jump into it. I just left it. If it comes back and hits and taps me into the trade, fine. If it doesn't, then it's one of those trades. It's one of those days that you don't get your typical setup, or your setup doesn't play out. Because trust me, I've also been in a lot of trades that immediately I went in, it came back and hit my stop loss. And first of all, Seb, that entry will make your stop loss to be wider. Because when I was contemplating, the price was exactly at this point. It was exactly at that point. And if I had entered here, that means my stop loss was going to be wider, to be at this low, and it was going to be wider. Then if it comes back to hit your stop loss, you know what that means. So I've been in a lot of scenarios, countless times I jumped into the trade and then it didn't go my way as I was expecting. It came back and hit my stop loss. So what I usually think, or what I usually tell myself, is that this is the trade always has three outcomes. There are only three outcomes. It will either tap you in and go your way, tap you in and hit your stop loss, or doesn't tap you in at all. So there are only three outcomes, and it won't always happen like this. There are times that it's going to tap me in and I'll make cool profits. There are times that I'll miss it like this, and there are times that it will not only tap me in but go down and clear my stop loss. So it's all about the probabilities. Once you're fixed on something, once you're fixed on sticking to your rules, following one particular pattern, setting these boundaries for yourself, that's the only way to succeed. Because the moment you keep on, today you're jumping into the trade, even when you succeed and you make profit, it doesn't mean that you made a good trading decision. It doesn't mean that that habit is a good thing for your trading, because that same habit is what will make you blow an account on another day. Because this boundary that I've set for myself could be what will stop me from getting stopped out multiple times, because the same way it went up, it could also go down and clear my stop loss. So it's always better you stick to whatever rules, whatever plan you have for your trades, and then just allow it to play out. So that was it for today, Euro USD. The analysis really played out, but we didn't get the chance to go into the trade. And this will have been a nice 1 to 6 hour trade. So, but then moving into tomorrow. Right now, the market is kind of chilling out after the bullish moves. So I'll still be hoping to get into another buy tomorrow. So I'll look for zones that I could go in. I could go into a zone like this. This is a nice zone that I can look for buys tomorrow. One here. Sorry. This zone right here. I could look at entering at this zone tomorrow, or somewhere here right at this red horizontal line. But of course, I'll still wait for confirmations, wait for market to bounce off that zone. If market reacts at that zone well, then I'll wait for a pullback and I go in. If that doesn't happen, fine. I'm still good. I'm still cool. So that's it, guys, for this Euro USD analysis. And I hope this was helpful to you. And if this was helpful to you guys, please smash the like button. Please don't forget to like. Don't forget to subscribe to this channel. Please, guys, that will really, really be helpful to the channel and to me. I love you guys and I appreciate you coming onto the channel. Cheers and God bless, guys.